What is going on, everyone? Good afternoon. It's good to be back. Today is Tuesday, August 26, 2025. Another bullish day, a very, very nice day. I'll take a look at the charts. Today was a big day for industrials, actual industrials, gold miners in Canada, big rallies there, and not so much for India and oil falling. And some say the most important sector are one of financials, and financials a new all-time high for XLF and new all-time lows for VXX. So just like when Powell was speaking on the other day for Jackson Hole, very bullish tape. No different interpretation today. Let's get into the doc. I hope everyone's having a splendid end of summer here. Don't forget Monday, Labor Day, closed market for that. Also, if you're going to Oasis in the New Jersey area, people are probably going to be a little slow next week. For many reasons. I will be at System of a Down tomorrow, so no show. So if you see me during Corn and System, say hello. There we go. And and I'll do stocks on Thursday, and then hopefully ETF wrap up on Friday, and then summer's over. Y'all have your last ice cream cone or whatnot, but keep it going. Okay, so today industrials, gold miners, and Canada, they were the spots to be today, up about 1.5%, and India and oil falling about 1.5%, and new all-time highs for XLF. How more bullish can you be there if new all-time highs for that group? All right, let's get into tail of the tape. Michael Buffer, but of FinServe. All right, here we go. Share. Here we go. All right, so SPY up 40 bips, NVIDIA up 1.1, Tesla adding 1.5%, stock continuing to look good. We said after it towed the line, more fight talk, UFC talk, MMA talk, 350, beautiful bounce off that 320. Palantir up 2%. Short sellers were right for a little bit off those highs, but I would not be sure that monster. Stock looks still incredible, adds 2% today. AMD adds 2%, stock looks great. Broadcom up 1.3%, looks great. UNH, they reversed on it. This showed its true colors today, down but just about 1.5%. And MicroStrategy Just Strategy. They do have a strategy. It's up micro. They should make it macro strategy, up 2.5%. Stock doesn't look so great. Ethereum getting a lot of the attention. Strategy stock does not look so wonderful. There are much better spots you can be in. Intraday today, below average volume day, about 52 million or so on SPY for the day. We average about 72 million. So, about 25-ish% or so off there. Quick math, but a nice bullish day. Here was the opening tape right here. Okay, and we really opened and held above VWAP, really started to get more lift after 11:30 or right around that European close. And then we still actually had a little bit of a battle with it, 2 o'clock, some choppiness. And then we finally got that lift and we left the station for a bit, $2 was the amount in SPY. It ran from 2:30 till 4, and the bidders were upset that the bell rang essentially at 4 o'clock, although it was a lower volume day. As I zoom out here for SPY, I still had around this market is just very, very strong. Let me move that big box there. We saw a divergence here, the all-time highs on August 22nd, 4 days ago when we hit 646.5, and you got in the RSI 63. So we're expecting some kind of a move lower towards 637 or so. But here we are continuing to crank. We had $2.70 or so to SPY to end at nearly 646. I'm still seeing very, very soft. I mean, I'm just more so, trusting cycles in the market environment and that divergence for now and decreasing volumes for what it's worth. But that's typical of summer. Just to see if we base around that 637-ish level right around the first week of September for a hopeful buying opportunity. I think that has good risk reward levels in entry right around there. That being said, though, we'll take a look at some meaningful charts. VXX, new all-time low today. So folks are not really even caring about good entry points. They want to get in, and there's really no fear in the market. There's no point. There's an article today about there's no really traders are no longer looking for VIX calls. It's just an awful investment. Instead, they buy pretty much worthless, very quickly worthless SPY puts because they're a better investment or trade to hedge and cover your risk. So the volatility is really out of the market in many, many ways. That has a tailwind for equities as a whole. That's risk on by definition. All that being said, in terms of the charts, I still see somewhat of a can't even say a consolidation or congestion. Consolidation rather. I still see some kind of a bunching around that 638 and level right around September 4th or so, right after Labor Day. And hopefully that will be your entry point. The next target I still see here to go towards those new all-time highs yet again in September, right around 651. I know some folks, because of the divergence, I've seen some technical analysts online seeing much more of a collapse, and they have a longer channel going back from 2020 all the way through 2025, and we're at the absolute tippy top, and we should actually have a drop down to 550 in this chart. I don't think that's going to happen. This actually can drop all the way to 595, and this trend would be intact. Obviously, weakened momentum, but this market is obviously still stupendous, and we're coming 2 days off of all-time highs, but obviously with a gross divergence. So that's about it. Those are your risk-reward levels. And to the downside, yeah, I mean, if we have an ugly sell-off, 625, I don't see that happening. And right now to the upside, they probably want to squeeze it till 650 short term. All right, let's see what they're using, what vehicles they're using through today's trades. So this was interesting. Big move today out of the industrials. The Dow itself moved up 30 bips, but the XLI up to 1%, a big move, about 1 2/3 or so standard deviations. XLI hit its all-time highs way before the S&P 500 did back at the end of July. So I guess a month, not super a lot, but, you know, a great looking chart here. It peaked at 155 then, and then a lot of consolidation right around 151. And just 3 days ago now, it started to pop its head. Today, really a nice move continuing from really 2 days ago. Now what? I think maybe it wants to make another move towards 155, maybe. But then after that, more chop around 151. But a great looking chart. If you're long this, nothing to be upset at. But this looks like it wants to ping pong more to me, maybe, before it gets going. That had a nice run. This has been a lot of time. So it could be a coil spring, but I still think it bounces a little bit. Maybe it moved to 155. And again, the all-time high is 155.1 July 28th. So industrial is definitely a good spot to be. Curious what it says, where it goes this week and beyond. GDX, I always tell you to buy this when it has dropped to the 50-day moving average. That's common sense. This 2-day multiple sigma move up 2.2% today. Not an old story. Gold. I know gold itself looks like it peaked months ago. The gold miners are cranking. Look at this confirmation, 71 RSI, new 52-week high today. It is not an all-time high. This thing has room to go. If you think the wind is to its back, and no one even told us since January that you can close, you're allowed to close under your 200-day moving average. You're not really, but this thing's a superstar, so it doesn't care. Great candle. They took it to 61.68, and they closed at nickel off the highs. They were upset the bell rang. Looks absolutely great, GDX. I say to buy this on down days. The inflation story and just what we've just everything in terms of policy. Nothing changes in terms of this trend. The flows look absolutely great. In terms of short-term target, I personally was about 60 half. So for me, this is a little bit stretched. I would rather have, I was saying to buy this back here at 53. So, what a great move at 61. This can really move in the stock and in options. So right here, I think it probably, and this moves to the upside and moves to the downside, quite both the same in terms of volatility. It has a $1 ATR or average true range, which is what it moves in a day on average. So I still think over the next 2-ish weeks or so that this does have a bit of a fall towards 57.5. Not a massive fall, but that's big enough if you're long it. And then I think that will be your opportunity. I think these old highs or those old resistance points will be the new support, and you're on a runaway, continue to be on a runaway train in the gold miners. The GDXJ looks great too. This is just more liquid. The GDXJ is technically slightly better fund in terms of returns, and probably not though in terms of options liquidity. New 52-week high, 52-week high for GDX. Congrats! I wrote about it in January of it having a spot in your portfolio, and it still does. Endurable trend, but good to see. Wouldn't chase it here. Rather get 57 handle about 2 weeks, and I'll be chancing to buy it there as well. And then XLR after that was Canada up 1%. That has a multiple standard deviation to move for this country. That's a big move for Canada. They had their highs 2 days ago when it hit 48.10, call it. Pretty bearish divergence here. We couldn't even get to, what is that, 65, call it in the RSI. So don't love that. I wouldn't chase it here. I think this probably consolidates a little bit towards 47.20. And then I give it about a week and change or so, maybe towards the end of next week. And if you can get in this at 47.25 and there's spotting portfolio, you want something, North American, United States, and Tech Light, and World's on fire. This looks great. This has had also above 43 curve fitting, I know, but great RSI trading since mid-April, 2 days off the lows. Great looking chart after being in purgatory until mid-April, and a really, really nice looking stock. 56-cent ATR, a lower volatility you must accept. Okay, next, let's look at the losers today. Not everything was just up, and away. We will look at the losers. Haven't looked at this one in a little bit. India, ugly day. Look at this chart. Absolute mess. Absolute mess is India. It's not all China. It's not all breakouts. India here, this looks like a relative strength sell here at multiple standard deviation mover lower today, down 1.3%. It actually closes under a sliding lower 200-day moving average. But what else is new? That's been the story since April. These guys bottomed March 4th at about $47. And here we are, a sliding lower 200-day moving average at $52.75. They closed below it today. Not good. I think this is an ugly 2 weeks. Continues to be an ugly the next 2 weeks for this group. I think this heads to about 51.80. Looks in the cards. It looks like they want to get back to those May lows. This looks ugly. India in free fall. Just nothing good to say about that. Ugly move today. Also, oil, ugly move, down 2.25%, right to its 200-day moving average, just a touch above it. We had comments on oil a few weeks ago. Right here, a little bit surprising how hard they hit it, and this was starting to look like an ugly candle from yesterday here. But 200-day moving average is absolutely flatlined at 73.40. I still think they maybe want to take it up in the next couple of days, but only as high as, maybe like 78. I don't know. I don't want to totally quit on the pattern short term, but I'm nitpicking here. It's over 1 day versus, 3 days. I would still say the ceiling for this short term this week is, tops probably, 76. I don't really love this. The resistance there and the Dikembe it's had off of 77 from 3 weeks ago has been impressive, that it does not live there. And now it's trying to see, can it live with its 10-month sliding 200-day moving average. I think maybe it tries to get towards that 76, 77 one more time, as I said, and then it's going to have more to tussle with 74. It's going to live with that 73 handle, I think, for a little bit longer. Don't like oil. It peaked in January, 84.60, did USO. All right, top three gainers of the past 5 days, past 5 trading days. If you've been in these long areas long, you've been crushing it. The story continues to be Ethereum. This is the Ishares, absolutely massive volume too. Today, Ethereum adds 4% through the ETF. This thing hit highs on the 22nd, excuse me, at 36.80. Candles are getting a little bit smaller. You can see that very visually here. Massive candle, up 14.5%, as if they cured cancer. And then smaller candle here to the downside, down 8.5%. And today, down 3.5%. You can see it's cutting itself in nearly halves. Tomorrow is at a 2% move. We'll see what it does overnight. It's we'll see what it does here, but obviously it's getting a little bit tighter and tighter. What will it do tomorrow? Today, like I said, up 4% over the past 5 days. Why are we talking about it? It's up 11% over the past 5 days, the best of any ETF. And when it got there, it was a 69 RSI with the all-time highs there on August 22nd. As I look, and what I said from Friday's video is I personally wouldn't chase it here. I do think you'll get an entry right around that 31. I think this falls like to the downside. I think this collapses and mean reverts to the downside right around to 31.5 to 31.65 in about a week or two. So yeah, it looks like a great fall. Almost 10%. But again, it's up 4% today. And it's had a monster 11% week. I do think it revisits a 31 to 32 handle, and that will be your invitation to get to the top two year-over-year monster leader in return. Ethereum doing its heavy lifting this week, up 11%. Wouldn't chase it here. Wouldn't fade it, obviously, though, either. Okay, number two, second best week of all ETF land, and I haven't looked at this chart either for a little bit. Uranium up 9.5%, so right on its heels of Ethereum. These are areas you have to be in, depending on your time frame. But this chart looks great. This has been, I wouldn't say great. This had a very difficult time. Then really after mid-May, this was a beautiful. There's a couple of ways you could have bought this chart. Closes above a starting to rise 200 moving average, which was May 20th, and that was at the close that day was $28. You could have done it here when we first entered overbought. Really for the first time in 2025 with a combination of 200 moving average, seeing that bottomed out after real flush out over the oversold. What else? You could have bought here over a just a simple 6-month breakout system if you just bought $33 and then went to 42. So right here, what do we do with uranium? I like it. I think it has a nice 2 weeks. I think this thing is headed to about $41, $42 to new highs. I like uranium here. They took it as high as 23 today, and they took it down to 40.70 close. But I like it. I think you'll get some vol expansion here. That'll take it to a 42 handle, and that will be that's not new all-time highs. Apparently, I don't know if my data provider is smoking crack, but from 2011, apparently this was $134. I believe it, I guess. But new 52-week highs, I will say, it looks like to be intact for uranium in the next 2 weeks, and it's been doing some really great work in the past 5 days, up 9.5%, today up 2%, continuing the trend. And number 3, we've been talking about it, GDX, the third best place to be, not only for year over year, but also this week. So time frame is king, 52-week high today. This thing's been swinging for you last year. It's been doing it today. It's been doing it this week. You can laugh or say what you want about gold miners. You gotta buy and allocate some to it, especially if you're a shorter term trader, like under a year. This thing's been absolutely crushing it. Or longer a year. What the heck? Go Peter Schiff nuts. So the GDX up 9%, just behind Ethereum here is GDX, as I said, to $62 nearly. Absolutely love this chart. Wouldn't chase it here. I would get around $57 if you can. This thing, like I said, when it falls, it falls. The flows look absolutely great all year, really, for this thing since February. Really strong closes, buys on close for GDX, and it confirms my confidence in it. Like an entry for 57 for y'all, 57.5 in about 2-ish weeks. Then you get on board this monster. But they've been riding these, these winners, Ethereum, uranium, and gold miners this week. What have they been riding into the toilet? Volatility, new all-time high, lows rather. Floridians live there or whatever that. Just stutter step there. VXX, new all-time lows, down 7.5% this week. It's almost hard to find stuff that is down this week. You'll see what the next 2 items are. But this is that carrot right here denotes a new 52-week low. Is actually a new all-time low. The dead cat bounce on this thing over the next 2 weeks will take you to probably 39 to 40. It might be on, I don't care. He's going to probably have a pinata of a Fed chair or something. It doesn't really matter. But it'll probably get VXX at 39. That will be your cue to likely sell it. And that's as good as it'll get. Truly oversold. They have been selling puts, no interest, having any interest in issuing puts and buying them since mid to late July. July 23rd, really, this thing started just bouncing ball off the table. It looks ugly. 36 here. I remember when we said, will it, can it break 40? And I said, yeah, it will at some point. And now we hear at 35 handle. Like I said, dead cat balance probably gets you to 39, maybe 40 in the next 2 weeks, and that's it. Would not chase it. You probably sell calls on this for quite a while. No one wants that, as I said earlier. Next thing, I had to zoom in for what was a loser in the ETF space, and it was the risk-off space. This is where either Campbell's Soup is and all that stuff. Consumer staples down 2.7%. Look at this candle. When you see this go down, 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 that means stocks are going up, up, up. That means they are dumping Campbell's Soup because that's not going to make you money. NVIDIA and Palantir are, which is almost like the opposite of Soup. Soup, no need. Do they have all that data? They already have all those letters in there already, I think, all the SpaghettiOs. XLP, this chart looks ugly. Down 65 bips today to its 200-day moving average. We are actually just a touch below it today. I think this group continues to fall for the next 1 to nearly 2 weeks to about 79.5 where my cursor is. I think this comes very close. If not, it puts in 3 to 5 month lows. I think this wants to get to a 79 handle. A clean rejection here off of 84. These guys peaked, this group, last September. This was a last year story, although it doesn't really move a ton. The 200-day moving average flat line here at 80.80, and we are below it today. Don't like this for y'all. And then the third worst place to be, we touched on it, India, they've been selling it aggressively. It's down 2% total, but it's really been ugly in the past 5 days. Just sell, sell, sell today. It continues down 1% nearly. And like I said before, in terms of trades, I don't like this. It looks like to be in free fall. This looks like it does want to get to about 51.80 or so over the next 2 weeks. You can buy. I kind of love the idea of buying the 52. I don't know what the strikes are. 53 puts. See what those are worth. I think there's still more money in this trade to the downside, which is crazy considering what's going on globally with U.S. and other markets. Canada, we just looked at other charts. Top 3 trades of the past 5 days. If you've been long Ethereum, uranium, and gold miners, you are absolutely crushing the market. That has been the key to the kingdom. What else? All right. Tomorrow I'll be exploring the toxicity of our city with System down at MetLife. Go look at some charts there. Aerials in the sky, more likely. And then I will see you Thursday for stocks. Enjoy. Is it still on? Don't tell me.